So we finally get to see some drama in today's trade. Good evening, traders. We are on the 19th of October, 8:36 p.m. Indian Standard Time. The benchmark Nifty down 62 points, little less than 0.5% in today's trade, and a beautiful looking engulfing pattern based on the Japanese candlestick parlance. Well, there was a bit of drama for sure, and a look at the 75-minute time frame will show you that this was the first bar and this was the last. In between, the index did manage a bounce back from its early intraday lows, but towards the later half, towards the close, it gave away significantly, and a fair bit of momentum came in from some selective stocks on the downside. Not much to worry if you have a bullish bias on the market, because the index needs to face some nice gap ups that it had created on its way up before. So there's quite a bit of levels that the index can face, which can offer good to decent supports. That time will tell us. But just a 60 odd points fall in just one day does not mean much. But yes, typical technical analysis would suggest that there is an engulfing pattern. You should be careful. So how much careful should we be? So let's try and analyze. We were looking for some bit of ease off, slow down, considering the kind of momentum with which it went up. Some sign of it comes in today's trade. Even if the index falls further down towards 18,300 kind of levels, or even comes down to test the psychological 18K, I think for the overall long-term bull market, there's not much of a worry at all. Yes, the psychological 18K will play a role. A quick look at the volume profile of the last leg up clearly shows that there's a bit of volumes happening up here. That's primarily because of today's high volumes, and this is primarily because of few large cap stocks like Hindustan Unilever is there. But further down, the point of control for the Nifty is a little below 18K. So just, I don't know how prices will play out, but just in case we get some kind of a serious correction, if at all, then if the market even slips below 18K, one should not be surprised. But will it? Now, a look at the sectoral indices. It was the IT which actually was a rebel and up over 2% in today's trades. Infosys was one big contributor. Amongst the second tier IT companies rallied significantly. Financial stocks were also positive, but then bank Nifty was down. We have an engulfing there. Private sector banks engulfing there as well. Energy engulfing there as well. And pharma we spoke about yesterday. It corrected more. Auto has started to slow down. Small cap, a big engulfing. This is like a 3-line strike. The CNX mid cap also looks like a 3-line strike, and the metal is an engulfing. Now, when you see the same thing over and over again, almost everywhere, it tends to be too good to be true. It is very obvious. It becomes very obvious. And at least in the stock market, whatever little I have learned is the stock market doesn't like to deliver what is very obvious. And so if history has to repeat, and if it has to deliver that way, then I don't think that the markets will come down immediately based on this engulfing. Eventually, yes, but based on this engulfing, it's so obvious across most of the stocks and the sectors, I seriously doubt that the index will offer us any significant correction, maybe a shallow one just to bounce back to a new high again. But there were a few stocks which got really hammered today, and from the FMCG it was ITC, big 6%. There you go again. Tata Motors had a beautiful run, so come on, let's allow this stock to cool off a little bit. Maybe 450 is not a bad price. We had Tata Steel from the metal space, the large cap SBI, the PSU banking, again another engulfing. Gainers, Larsen had a wonderful move, though slipped a little bit, but huge volume happening there. Infosys, I just spoke about, was one of the rebel. And we had Kotak Bank, HDFC from the private sector banks doing okay. But in today's discussion, I would like to talk a little bit about Hindustan Unilever. We had the earnings today, and the stock did some serious um, fluctuations on the upside and as well as on the downside. Huge volumes, exceptionally huge volumes for the near month futures contract for Hindustan Unilever here on this chart. Now, downtrend indeed. Actually, if you ask me, it's not exactly a downtrend as of now. It's probably on the verge of a reversal. But keeping in mind 4% long ranged bar in today's trade, what's in store? What can we expect? Number one, 2720 is the most important resistance for the stock. Until and unless that is taken out, one should not go bullish. Number one. Number two, with today's breakdown, the stock has broken down multiple moving averages as well as the VWAP price that we can find from the lows of 30th July. So what I've done in this chart is I've combined VWAP with volume profile and a simple Fibonacci retracement, which shows that 2500, 25, 16, 20, this is the level which is confluencing with the highs of June, and that's the kind of short-term immediate support. But 2450, 2430 can be the next leg, the next level to watch for in the stock if the selling continues. But strategically, for a short-term trader, do nothing, wait for it to cool off. For an investor, this is not a bad time, this is not a bad price either. So let's wait for the 2500 to breach, and then one can look to accumulate into this really good performing large cap Nifty 50 stock. So let's quickly sum it up then. We have some correction, a little bit considering the big move that we had. No need to change the stance, no need to change the view and the bias. Let's see what plays out for the rest of this week. As we create this video, SGX is flat. It's just up 5 points. Dow Jones and the US markets, S&P 500 is up 0.5%. So we'll see how it opens. But as I said, that when we see the same thing over and over again at the same point of time everywhere, I seriously doubt that it's going to play out. So we'll see how this bearish engulfing pattern deliver for the next few trading sessions for our markets. Thank you for listening to me. Trade well. Trade well.